Okay, so we'll start. Thank you for being here. Thank you for coming. It's great to have even this many people around for a blockchain meetup. You know, the industry has gone through a lot. So for anyone that's still here and interested, good job. Good on you guys. So first of all, quick poll. How many people of you have heard of Bitcoin? Just raise your hand. Okay, that's a lot of people. Blockchain? Okay. And how many of you own Bitcoin or any other altcoin? Okay, not bad, not bad. All right, so payment providers. These four companies are just examples, right? What do they all share? What do they all have in common?
Money. Electronic
money. Yeah.
Electronic money.
Okay, electronic money. There's something specific I'm looking for here. There's like one word. Closer. They're centralized. And centralized, what happens here is that if you're centralized, you decide the fees, you decide who can join our services, who can use the service, and who can't, right? So you have full control over who's allowed to participate. And so what if there was an alternative to all this? You know, what if there was something that was decentral, or you didn't need any intermediaries to send money to one another? What if there was a way in which we could transact without someone chasing our data and trying to sell it to the highest bidder? What if there's a public network, an open one, a decentralized one? And the good thing is there is, and it's called Bitcoin. So what is Bitcoin essentially? It's just a peer-to-peer decentralized currency where me and you can transact with one another directly without any intermediaries. And the really powerful thing about Bitcoin is that it decentralizes control. What I mean with decentralizing control is that instead of 1% controlling the use of 99% of the people, it puts the power into the 99% of the people instead of the 1%. So essentially, everyone has control of the system rather than just one company, one government, one person, whatever. And so essentially there's a couple concepts, a couple pillars to Bitcoin that you really need to know about. And this has been introduced by someone very famous in the space called Andreas Antonopoulos. And so he speaks about it, first of all, open. And what this means is that the network is accessible to anyone, right? No one needs authorization to join. Anyone that has a phone and internet can join the network. And you basically aren't left out, no matter what your race is, what your age is, what your gender is. That doesn't matter. The next thing is that it's borderless. So what I mean here is that if a certain company, right, has certain organizations set up, they're limited in the scope of where they can offer their services to, right? They need a partner wherever they want to expand or open up. They're always going to need basically someone or a touch of contact where they can operate. So with Bitcoin, that's not the case. It's borderless. I can send money from Vienna to New Zealand within a minute. The next thing is that it's neutral. So neutral, I mean, it doesn't discriminate by age, by gender, by race. That doesn't matter, right? There's no KYC procedures. There's no AML. There's no looking at, what your background is or what your purpose is of, using the service. You're just allowed to use it. The next thing is censorship resistance. So this one is really important because if you think about Facebook, they've announced the coin, right, called Libra. That's going to be their cryptocurrency. But they have a lot of problems because they can be censored in the sense that, so once they announced Libra, what happened is obviously the regulators came up and knocked on the door and said, you don't comply with a lot of rules yet, so you need to comply with everything we tell you to do, and then you can launch Libra, right? Or else we're going to shut you down. Same thing goes for Facebook, Google, Instagram, WhatsApp. They're all banned in China, for example, right? And that's because they can be censored. Now, Bitcoin doesn't belong to anyone, and therefore they can't shut it down. They can't actually just say, okay, Bitcoin is illegal in our country because we don't want you to use it, we're going to shut it down. They can't because there's no central server, there's no central authority that says, we are the company Bitcoin, we operate here and here. That doesn't exist. The next thing is that it's public. And so basically, there's something called a blockchain, right? And it's basically a ledger, and it stores all transactions in real time. So whenever you send money or receive money, there's something called blockchain live, and you can go and have a look at all transactions that have ever been sent from one person to another. Now the good thing is here though that with blockchain is information that should be kept public is kept public, and information that is kept private is private. So what I mean here is that you can see the amount that's been sent, you can also see when it's been sent, but you can't see who sent it to whom, right? Because it's just a public address, and public address A sends money to public address B. But you don't know actually who owns it, right? So you don't have any source of the physical address, the identity, the IP address of the person sending it. And the last thing is decentralized again. Essentially that control is decentralized, and it's an open and distributed network instead of being centralized and being owned by one certain company, government, or entity. All right, so there's one thing, this is a little more techy, so hashing, and that's basically, it's a method of cryptography, right? And what it does is it takes any kind of information and basically makes it into a unique string of text. So, when you basically make an account on, let's say, Facebook, right? And you put in a password, what Facebook does or any other company. Okay. I think okay. Microphone. Can you guys hear me? Okay. So basically, anytime you make an account somewhere, that password is also hashed into something. So when they match, so when you log on into Facebook, let's say, and you put in the password, if it's right, it'll match the hash within their database and then confirm those two match. Then you get a login, right? And then you're into Facebook, into your account. And the same thing goes for Bitcoin, for example, but it's different here because they use hashing to write new transactions, to timestamp them, and basically add a reference to a block. So as you can see on the top, so there's block 1, which was the initial first block of the blockchain, right, in Bitcoin, all the way to, let's say, 1,000 and onwards, and whatever block is currently being mined, for example. And the important thing to note is hashing has a one-way nature, and it makes it very difficult to reverse transactions. And so if any kind of hacker wants to infiltrate the Bitcoin blockchain, they'd have to first of all manipulate block 1,000 and all the hashes leading up to the very first the very first block. And in order to do that, obviously, that's a lot of computing power that most companies and most hackers don't have the resources to. And that's why it's a very key concept, the way they've designed the security protocol of the Bitcoin blockchain. And since today, it's never been hacked as well because of that reason.
Question, please. How do the hashes relate to each other? How does the hash of block 2 relate to the hash numbers of block 3?
Yeah, so essentially there's miners, right, in the Bitcoin blockchain. And their whole key is that they have to basically solve an algorithmic problem, which is finding the hash of the newest block. And it can't be the same as the previous one because then it would be the same block. And every block is different because there's obviously a different group of transactions. And so essentially, each one is given a number because it's a different block of transactions. But in order to basically mine it and produce that block, the miners have to solve that algorithm, which gives them access to that new unique hash code for that block. Okay, so can we take, maybe we have questions at the end, please? We'll have time for that as well, sorry. So one more thing is basically trust the system. What I mean here is that now we have essentially removed the human element of error in the equation when transacting with one another. People are lazy, people forget, people sometimes they lie or manipulate transactions, and you don't know, right? So if you're using a centralized payment provider, they can give you a reason to reject a transaction. But here it's not like that. If you have the Bitcoin, you can send them, and if you have an address, you can receive it, no problems, no questions asked. And so one case I wanted to speak about is banking the unbanked. So right now, 1.7 billion people don't have an access to a bank account. We're pretty privileged being here in Vienna. We go to any bank, they will give us an account because we have a passport, we have a background, we have a birth certificate. So we're legitimate people in the eyes of the bank. Now for these people, for these adults, 1.7 billion people, don't have an access to a bank account, right? But they still need to do transactions, they need to pay their bills or receive money if it's remittances, whatever it is, right? You're human and you have needs. And these are just some of the numbers and they don't lie. And obviously there's big disparities. So in Brazil, in India, in China, and obviously this is a big issue, right? Because you can see the numbers and that just shows you what amount of people still have no access to a very common thing, which is a bank account, right? And so the example here with the use of Bitcoin or any other basic cryptocurrency is that first of all you have low fees, right? So essentially there was a transaction worth $40 million. It was sent over the Bitcoin blockchain for $3 of fees, $3, right? And usually if you're doing an overseas payment, so if I'm sending money from Vienna to, let's say, India, I have to pay the bank's fees, the local ones, then the overseas payment fee, then the actual fee of processing it from the local bank in India, plus their regulators or whatever they put on it. So it has to be profitable for all of them. So maybe 40 million might cost you $50,000 to send. That's just an estimate. There's no opening hours as well. So, if someone in need needs money, or it's a Sunday and they have to pay someone some money, or they need money for groceries, they can't go to Western Union because on a Sunday they'll be closed. They can't actually. There's actually no real service, right? And with Bitcoin, it's a distributed network, and so anyone at any given time is supporting the system. There's always someone that's online and will take that transaction and do it for you. And also there's no borders, so basically no one is left out. Anyone can use Bitcoin, anyone can receive it. And there's actually a couple use cases already. So there's a company called BitPesa. They're based in Nairobi, Kenya. And they're a payment and digital exchange platform. And obviously what they do is they try and help get remittances back to families, right? So if I'm here and I want to send money to Kenya, Bitcoin is actually a pretty good use case, and I can do it through BitPesa because they can then receive it in the local currency. They're also based in Nairobi, they're based in Ghana, they're based almost around all of Africa, and they're working on banking the unbanked using Bitcoin. There's another use case which is actually just as an alternative currency because, let's say, Venezuela, right? It's very key, a use case because they've had an inflation rate of 282,000 just in April 2019. So essentially the currency is facing hyperinflation, and it obviously makes it difficult, if you're trying to receive money or send it, there's no actual given exchange rate that you can use. Same with Zimbabwe. They have a note that is $100 trillion, $100 trillion, right? We have a 500 euro note, and some restaurants or places already don't accept 500 euro notes, right? So for them, it's actually just a matter of an alternative currency based upon their actual local currency. So the next thing is obviously we're just going to speak a little bit more about blockchain in itself. So all it really is a decentralized database, right? It's a ledger that contains all transactions that have ever been made from the very first until the current one. It's immutable and tamper-proof because of its nature, right? That there's no central point of authority. So the way it usually works is, right, so with MyHeritage DNA or Facebook or any other platform, right, they can be hacked just because the hackers know exactly where to infiltrate. There's one central server, And once they have access to that central server, they can get all the information and data out of there. With this, it's a little difficult because it's kind of flattened out, right? So if you want to, again, manipulate one block or one certain transaction, you have to go through the whole chain of transactions from the back to basically manipulate all of them. And so obviously, cryptocurrencies, there's been spoken a lot about finance and blockchain as well. So there's basically 3 layers, right? And that's the easiest way to explain it. So the first one is obviously just the deployment of cryptos in applications such as cash. So here I mean money transfers, remittances, payment systems essentially. The second one focuses on means beyond cash. So this is for the financial markets, stocks, bonds, mortgages, all that stuff, right? That can all also be actually automated. And the last one, which is a more interesting use case, is blockchain 3.0. And that's basically looking at areas where in government, in supply chain, in healthcare, you name it, right? So it's obviously open-ended. The problem is just kind of understanding the whole concept, and then if it ever can be used, and where it can be used, and if it's even, if it makes sense to basically apply it. So these are just some potential use cases. I'm not saying they're going to work here. This is something that has potential, but it's not necessarily going to work. So the first one is supply chain. So supply chain, what they can essentially do is assign identity numbers to certain products, whether that's any commodities, anything they're transferring basically, and they can be kept on, they can be secured onto the blockchain, and then they will actually see live, okay, this has been farmed in this certain country, then use this means of transport to get to here, XYZ, until the end user, right? So you can have full transparency from the initial, basically, let's say catching of a fish, all the way until it's sealed and put in the supermarket. The next thing is digital identities. So I spoke about this before, MyHeritage DNA or Facebook, right? So they have all kinds of data on you, right? When you've been born, your birthday, where you go out, what you do, your interests, your behavior, all that stuff. And that's okay, but the problem is these get hacked. So MyHeritage DNA, for example, people were giving up all kinds of information about themselves, even up to birth certificates or their background, where their parents are from, so relatives, all that information, and they got hacked, right? And so now all of a sudden there's a trust issue because you don't know who actually still owns your data. So is it the hands of MyHeritage DNA, or is it some group of hackers? No one actually has an idea anymore of who owns the data. And so with digital identities, what you can do is you basically upload your information, whether that's your CV, your birth certificate, onto a private blockchain, and essentially you can give any company or entity or individual the right to access your information. And this obviously is just a more secure way, because then it's tamper-proof, it's secure, and you can you only give permission to people that you want having access to your information, right? So then, in that case, it won't go on to a third or fourth or fifth party. A land registry, for example, is just something that could be interesting. So that's clarity of ownership. And actually, Botswana and Georgia have actually already launched pilots using this. And this is just, obviously, depending on the country you're in, if there's a lot of bureaucracy, anything can go wrong, right? It's a piece of paper that says who owns what, and if that's lost, then they'll maybe go into an electronic database. Again, this database is not that secure as people think, because it's central, it can be manipulated because it's one central point. So if 10 hackers get their heads together and decide, okay, we're gonna go and infiltrate this certain server, the chances are they will manage, right? And the last thing is voting. This is, again, a potential use case that you can use. And the first thing is obviously that in some countries you still have to physically appear to vote. And some people can't be bothered or too lazy to actually just go and vote, right? So then you obviously have a way of voting online. But again, the same case with voting online is that there's a central database, and if they know exactly where it is, they can go in and infiltrate it. So if you have a blockchain-powered voting system where people upload their vote onto that server, no one can actually really manipulate it because of the whole security measure of blockchain, right? And also, this obviously makes it a lot more secure and more trustworthy than any politicians or any websites that say, you know, give your votes to us and we'll transfer them to the government. So a little bit about what we do. Sorry, we'll take questions at the end.
It's about you.
Yeah?
It's very important, I think, for me personally, to know what's your background.
Yeah, I was just getting into that, sorry. So what we do and what I do essentially, the first time I heard of Bitcoin was very late 2015. And a friend of mine basically sent me €5 in a nightclub, and it was like a Saturday night or something. He took my phone, he downloaded a Bitcoin wallet for the first time, and he sent me €5, right? And I thought, okay, this is not gonna arrive until Monday or Tuesday, so I forgot about it. And then the next day I actually checked my phone, and the payment went through in 3 minutes, right? So I didn't really understand what that meant, because, you know, usually it's a day or two, and, you know, if it's PayPal or something, maybe it's a bit quicker, a couple hours, but I wasn't actually sure what this all meant, right? So I called him up and I said, you know, what just happened? Like, I'm not really sure how I got the money and this fast, right? So he told me, you know, he opened up the transaction, he said, so you see, you know, the time, when it's been sent, what amount has been sent, and it's been confirmed, right? So then he started going into how, you know, how the whole network works. And so what I did, obviously back then I was still studying. So when I was studying, what I did is I had a bachelor thesis to write. And what I did is I wrote that on blockchain and finance, around 12,000 words. And obviously after that, I got into the subject more and more. So as soon as I got back to Vienna, there's something called House of Nakamoto. It's basically a Bitcoin retail store. You can go in, pay, basically there's physical Bitcoin ATMs. You can basically put money in, cash, and it exchanges it to Bitcoin for you, right? And what we were doing is we were in-house and we were consulting people on, you know, downloading a wallet, or, you know, buying Bitcoin, selling it. So basically the very, very basics of how it all works. So I did that for about 18 months. And while I was working there, I did a startup with a friend of mine. It was basically an HR platform that was basically helping blockchain developers and non-technical backgrounds basically transition into blockchain projects, right? So we were basically doing an HR platform for that. So what I've been doing recently, most of this year, is more meetups and events to help people more understand what it's really about, just the very generals and the basics. I also have a YouTube channel. This is just for fun. This is where I upload stuff about, you know, conferences that I went to, talks I had. I will be uploading this talk as well. This is just very simple, you know, about, you know, just for myself, and whatever I learn or whatever crypto news there is, I publish it as well. But the main thing I do is something called MD Crypto Consulting, and this is basically where we try and help people from the very basics of, you know, Bitcoin and cryptocurrencies and blockchain to understand what it's about, you know, how to store and safely secure cryptocurrencies, you know, to what extent should you trust crypto exchanges, what blockchain is about, how can you use it? You know, if you're a company or a project looking to start a pilot or a software into this area, we basically just look at, you know, where you can apply blockchain. But first of all, we ask them, what's your knowledge about it? So then they tell us what they know, then we tell them what they need to know, and then if it makes sense, right? So blockchain developers are very expensive, and, you know, they're not just all on LinkedIn looking for work. They're all booked out. So it's really important that you understand basically if you need it, is it useful, you know, is it cheaper, is it a cheaper alternative to what I have currently, and can it save me a lot of money in terms of, you know, time or reputation as well. And this is basically some of the challenges that we're facing is, first of all, the knowledge gap. So if you got into Bitcoin and cryptocurrencies in 2011 or 12, you were most probably a developer that was very, very embedded into the scene, and, you know, you heard about it because you are a software developer or something of that sort. But then you had obviously the wave in 2013 where Bitcoin hit $1,000 for the first time. So here obviously more people started joining. The problem is now that people are, want to join, but there's a too big inflow of information. So we're trying to simplify that. We're trying to close down that gap by basically just providing simple frameworks, simple ways to understand it. Obviously you need to do your own research, but that's the main thing we're working on. The second thing is the misinterpretation of the industry. So, people always, label it, or they've heard of Bitcoin as a dark web money, it's linked to drugs or illegal trafficking, whatever. Bitcoin is not anonymous, it's pseudonymous, which means that there is a way to trace back to you. And we want to obviously, help people understand that cash is still the most secure and most anonymous way of transacting. It's not actually Bitcoin. There are certain cryptocurrencies that work on privacy features, but Bitcoin is not the one. So again, that's one big misinterpretation, and there's 100. We just don't have time to go through all of them. Lack of experience as well. So people think they can just go into the crypto market and make a quick money. You can't. It's not that easy. You have to be very lucky. People spend 15, 20 years in the stock market, and then they transition to crypto and they say, this is a roller coaster. Like, this is nothing we've ever seen. Like, so here it's just about giving them a kind of a framework or an approach that they can take that may or may not work. We don't give any guarantees, we don't actually give real financial advice. We just tell you how the market is. If you're interested, it's at your own risk. And the last thing is misinformation as well. This is a new industry, and obviously there's a lot of scams and a lot of marketing schemes, a lot of big frauds, right? That obviously take the trust of people and throw it to waste. And essentially, one case happens, and people are all of a sudden saying, okay, this whole industry is just, it's a scam, right? But that's not how it works. And that's why misinformation, in the sense that people get trapped in the wrong coins, or people invest into the wrong projects. And what we're trying to do here is just tell them what you need to look out for, or simple things that may or may not help, right? We don't guarantee on anything, but we obviously want to help as much as we can. And that's basically just some of our services, is the consulting in the sense of, hey, I want to learn about Bitcoin, or hey, I want to buy Bitcoin. Where do I start? What do I do? That's something we do. Or consulting in the sense of, I've heard of blockchain. I work in this industry. Give me something I need to know about. Obviously, it's not that simple. So you need to define it for them, give them an idea. Again, give them a framework that makes sense. And then obviously training seminars. This is just where we do small seminars for a specific group of a company, where they'd say, we're looking to maybe explore this topic, help us understand it, and then we'll see, we'll take it from there. And the last thing is obviously just meetups. These are free events just to help people get involved. If people have questions or whatever it is, they can obviously come by and join us for this. That's pretty much it from my side. So these are just ways to get in touch. Thank you. So we'll take some questions now.